Credit cards are one of the biggest players when it comes to your credit score, which is why it's crucial that you not only have a credit card, but that you use it. Of course, using your credit card irresponsibly will result in serious damage to your score, so keeping your use responsible is instrumental. Luckily for you, the whole process only takes a little bit of help, like following these rules. How credit cards can build your score. When you're applying for any type of credit, the business that you apply through will use something called your FICO credit score. In computing your score, a number of different factors are considered, but two of them are more important than the rest. When it comes down to it, your credit utilization ratio and your payment history are the ones you need to pay the best attention to. Of course, what you get in regards to a credit score is going to be based on how well you know how to use your credit card. Let's look at the first part first. Your payment history is based on whether or not you pay your credit card on time, and it accounts for 35% of your total score. But it's not based on credit cards alone. It's how you pay any type of credit accounts you have. Next up is the credit utilization ratio. This ratio is actually responsible for 30% of your credit score and relates to how much of your credit card balance you're actually using. Each month, it looks at how much of a balance you're carrying over all of your cards compared to the amount of total credit you've been offered, also across all of your cards. When you have a lower balance compared to what you have available, you get a better result toward your score. Fortunately, there are companies that offer credit cards that can help you to make it work. Here are the Smart Investor Select's picks of best credit cards to rebuild your credit with. 1. Citi Secured Mastercard. The Citi Secured Mastercard is different from other secured credit cards. It is designed for individuals that have no credit or individuals with limited credit. Individuals with bad credit are not eligible to have this card. It's a great plus for you if you qualify because they don't charge an annual fee, and they report all card activities to all the three main credit bureaus. The Citi Secured Mastercard offers no rewards. Some of the benefits you can get from using this card include free FICO score access, account alerts, and flexible payment due date. However, there is a high annual percentage, which is one of the disadvantages of using this card. 2. Avant Credit Card. The Avant Credit Card is a great place to start for anyone looking to build a credit line or who has limited credit options due to past credit issues. Despite the fact that the Avant card has fewer bonus options and perks when compared to other credit cards, it is highly recommended for people looking for a card that can help boost their credit score quickly, especially for those applying for their first credit card. When it comes to building a credit history, the Avant Card credit card provides an alternative option. While no security deposit is required, Avant Card does charge an annual fee. This fee is disclosed to applicants during the pre-qualification process, and while it is typically $59 per year, Avant notes that this can vary depending on market tests. 3. Milestone Gold Card. The Bank of Missouri Milestone Gold Card is designed to help people with less than perfect credit who do not have the funds to finance a secured card. The card has a low credit limit of $300, but the high interest rate will have you paying off your balance on a regular basis, which will help you build your credit history. Payments are also reported to all three major credit bureaus. The card provides the basic benefits of a Gold Mastercard, but there is no balance transfer option, and the card has a high APR of 24.90%. The Milestone Gold Card does have an annual fee ranging from $35 to $99, which reduces your available credit line. Because your specific annual fee is determined after pre-qualification, you won't know what fee will apply to your account until it is approved. 4. OpenSky Secured Visa. The no credit check feature is probably the most exciting thing about the OpenSky Secured Credit Card. This is perfect for anyone trying to build credit, whether you're just starting out or trying to rebuild previously damaged credit. The OpenSky Secured Credit Card operates like the conventional unsecured credit card, except that it doesn't check your credit. This means a poor credit score will have no impact on your account approval. You are only required to pay a refundable security deposit, $200 to $3,000, when you create an account. This deposit is what determines your credit card limit. So if you deposit $400, your credit limit is set to $400, and you can begin using it immediately. This card can be used to make regular purchases wherever Visa is accepted. It offers you fraud protection, and the secured status of your card is kept confidential. You are even eligible for special Visa discounts. 5. First Progress Platinum Secured. While there are several secured cards available to help you rebuild your credit, the First Progress Platinum Elite has some advantages. You can open an account with a deposit of $200 to $2,000. Your credit limit will be determined by the amount of your deposit. So, if your deposit is $500, you'll have a credit limit of $500. In addition, the First Progress Platinum Elite reports to all three major credit bureaus. Every monthly payment you make is reported to Equifax, TransUnion, and Experian. This makes it easier to build your credit faster. This is a basic secured card, but you should be aware that there are fees and charges associated with your account. There is an annual fee for the card, but it's lower than that of compared secured cards. 6. Indigo Platinum Mastercard. The Indigo Platinum Mastercard is one of the few credit cards that approve applicants with a bankruptcy record and other less than perfect credit history. You can pre-qualify for the Indigo Mastercard without affecting your credit scores. If you're looking for a credit card with no security deposit to help you rebuild your credit, consider Indigo Unsecured Mastercard. There are no points or cashback rewards with this card. It reports on-time payments to all three of the major credit bureaus, so the cardholder can build their credit history. The Indigo card is issued by Celtic Bank, which is better known for its commercial products than its consumer products. Now, besides reviewing the top cards for building your credit, it's important to understand how to make the smartest choice for your needs. How to build credit with a credit card. Building credit is all about practicing those three habits. Pay your balance in full. A viable way of building credit is by paying your credit card balances in full. Avoid rolling over debt, as this increases your interest rates and lowers your credit score. Use the card wisely. Frugal spending is a way to rack up enough points on your credit score. Have a budget and stick to it. Do not initiate purchases that are not necessary. Extend your credit history. Using a secured credit card over time boosts the length of your credit history. Use different types of credit. Adding a secured card to your car loan, mortgage, and a student loan can go a long way to boost your credit scores. By mixing a secured card to an installment loan, this combines to make up 10% of your credit score, which boosts your history. How long does it take to build credit? Of course, you may be thinking about just how long this is all going to take. Unfortunately, it's not going to be a super quick process. Your credit history builds over time, and it will only continue to go up if you continue to do all of the things we've discussed here. Making your accounts current is the first step, and it can take at least a few months of reporting to get this to reflect. Paying bills on time is the next step, and then making sure you don't use too much of your balance and do use your cards the way they're supposed to be used. If you do, you'll be on your way to better credit. Rebuilding your credit. Tips and tricks. Building your credit is a long journey, but if you follow the right steps, it can be quicker and easier. Here are the most important rules to follow in order to build your credit effectively and efficiently. 1. Paying credit card bills on time. Do you know how important your payment history actually is? Paying your credit card bills on time, also known as your payment history, is worth about 35% of your credit score. Starting with the initial 6-month period and going backwards, your history is crucial. If you got no history at all, it's important to find a way to create some by paying a bill with your card. If you can't pay that bill off, however, don't put yourself into debt. Only use this method if you can pay off the card every month, so you can get updated information to your report. Plus, you don't have to worry about interest if you pay off the bill each month. 2. Don't miss your payments. Unfortunately, some people tend to fall into a bad habit, paying bills late, but you can improve. If you missed a payment 6 months ago, it's going to account more than if you missed a payment 3 years ago. Your FICO scores will continue to increase and to improve as you move forward. The improvements to your FICO score will improve your information overall, and as a result, your ability to get better financial conditions. Your credit score can influence not only your credit card rate, but also your available credit limit. This chart using Experian data shows the average credit card debt by credit score. It shows that those with an average to good credit score have the highest amount of credit card debt. This highlights that those with excellent credit scores are more likely to have a lower credit utilization ratio, and therefore carry less credit card debt. It also suggests that those with poor credit scores are more likely to have lower credit card limits or use alternative forms of credit. 3. don't cancel your card. It's important to have a long history of credit use to increase your record and your FICO score. You probably didn't realize just how important that first card really was, but responsible card use is crucial. If you find yourself opening and closing cards frequently, it can cause big problems. Instead, keep a single card as long as you can and use just that card. Your average credit age is an important part of the credit score, giving you about 15% of your FICO score. When you open or close an account, it changes your credit history age, and that brings down this portion of the score. 4. Don't overspend. The higher the balance that you have on your credit card, the worse it's going to look for your FICO score. Keeping your balance down to 30% or less of what your total available is will help you overall, even if you're not paying it off every month. Balances that are higher will start to decrease your score. If you want your credit card to help you along the way and improve your score, it's crucial to keep this in mind. 5. Quality over quantity. Having more than one credit card isn't necessary, whether they are store, general, or even gas cards. More and more credit cards will actually make you look worse to credit reports. Unfortunately, it can be difficult for some to refuse the discounts offered with store cards. Even still, you may want to avoid them entirely. A store card will typically have a high level of interest, and since most people tend to not pay off their credit cards every month, they know they're going to get a lot of money out of you. After all, it's difficult to avoid spending money when there's something special going on. When you get a better credit card, you can keep lower interest rates, low limits, and even no fees. You can even get bonus points if the card you have that does all these things also gives you some kind of cash back. 6. Don't forget your payments. Remember how we talked about payment history? Well, it's crucial that you take advantage of bank reminders if your institution offers them. Whether it's emails or texts or anything else, having reminders, or better yet, automatic payments, will make a huge difference. Keeping your payments on time will make a dramatic difference in your credit report. Just make sure you pay more than the minimum. 7. Request a credit limit increase. Okay, so you're making your payments on time, you're spending less, you owe less, and you're starting to build your way up. Now it's time to start thinking about an increase for your credit card. Remember that your credit utilization is about how much you spend versus how much you have available. By keeping your score down to no more than 30%, you'll be able to improve your score. If you've got $10,000 of credit available and you've spent $2,000, it means your utilization is at 20%, which is good overall. But increasing